Hey guys and gals, it's Grim here. I'm just going to be going over my experiences and my overall thoughts about Valve's EAs in this little video here. I want to start off by mentioning two big points here, and those points are: one is that I am a US client, and when I say client I mean a US trader. So, and why is that important, you may ask? It's important because as a US trader you have less access to competitive brokers. So competitive brokers is ones that compete against each other, offering the best conditions for the client. So for example, IC markets, RoboForex, and all of those will offer better spreads and lower slippage compared to the ones we have access to in the US, and that's just due to regulations and so on. So keep that in mind. So my results are going to be worse than other people. The second point is that all of Valve's EAs increase over time in pricing. So the point you buy it at now will be majority of the time, if not all the time, always cheaper than what it will be in later. And when I purchased this, it was significantly less than what it is now, from even like almost double or triple it is from when I purchased. So keep that in mind, that I spent significantly less than what you would have to spend, assuming that you decide to buy now. So let's just get back to the slides over here. So let's go. The first slide is just a little quick about me here. So at the time of purchasing, I was a regular investor, and when I say regular investor, I mean someone who doesn't know much about investing and just pretty much didn't do due diligence whatsoever. They just threw money into the stock market every month. That's it. That's what I did, and I was fine with that. Next point is that I started with no experience. So this means I didn't even know what due diligence was. I didn't know what forex brokers was. I didn't know what trading was. Only thing I knew was what foreign exchange was, which is the exchanging of foreign currencies. That's all I knew. And the last point, this might even be the most important one, was that I was and am still a university student full time. So this means that I don't really have time to manually trade, nor do I have time to even monitor like one or two trades, just due to the hectic schedule. So next slide is just to talk about what products I own out of Valve's EAs. So Valve owns 3 EAs, and it is Waka, Night Hunter, and then Evening Scalper, if I recall the names correctly. So I own 2 out of 3, and they are Waka and Night Hunter. So the first one, Waka, is a Marty Grid style EA, and I'm sure most of you guys already know what Marty and Grid is, but for those who don't know, it's a strategy that people will consider, it is dangerous and it's gambling, but the way that Waka integrates and utilizes it is very smart. It's very low risk, yet still providing and giving profits every month. So what is Marty and Grid? Marty and Grid is pretty much, as the trend goes against you, as the trades go against you, you start to average out your positions in hopes that it'll come back to its average, or come back to where it was. And this means you have to like double your lot size and so on and so forth. So the next advisor we have on the list that I own is Night Hunter, and I purchased that at $600. And if I didn't mention, I purchased Waka at $400, and I believe Waka was around it started off around $300, and then I purchased it shortly after at $400, and now it's around, I believe, $900. So keep that in mind. You're paying double than what I paid. Night Hunter, I believe now is like $1,800. So that's almost oh no, it's like $1,600, something like that. You can just check and see, but it's almost tripled what I purchased. But not to get too sidetracked, Night Hunter is a night scalper, and what it means is that it trades in between set time frames or time slots, so that it utilizes no dangerous trading strategies like martingale and grid. It simply has a set stop loss and a set take profit. So if it hits either one, that's it. You move on to the next. So there's that. Let's move on to our next slide here. So why did I choose Val? So these are just some of the reasons, but I don't think you really need to know that because it's not really important. So I'll just tell you right now the short summary of it. So I stumbled across Val because a friend recommended Val to me, because at the time Val just released Waka and she only had Night Hunter prior, and my friend had owned Night Hunter, and he had some success with it. It wasn't grand, it wasn't, you know, as profitable as he thought, but it was still profitable nonetheless. So that's why he highly recommended for me to check it out. And he knew that it was a martingale grid, and with martingales and grid is less broker sensitive and is less region sensitive, so that means even US clients can profit on it. It may not be as much, but it's still profitable at the end of the day. So that's why he recommended it to me, and that's why I decided to check it out. What I did 1 to 2 weeks of research of just going through all the product pages, going through customer reviews. But what made me purchase at the end of the day was the extensive track record by Val herself. So she has multiple of like each advisor. So like Waka has maybe like 10 of them, to like 10 signals, and they're all lasting years and using different settings. So you know, you can gauge like, is this one better for me, and so on and so forth. So that's what, you know, brought me over the edge to purchase it. Additionally, some other things that helped out was I contacted the current buyers at the time, which was everyone but me, what their overall experience was. And it was a wide range. You know, some people were dissatisfied, some people were satisfied, some people super enjoyed it. But you know, the overall consensus was that it was profitable, and that's all I cared about. So that's why I hopped on. So that's just how I stumbled, and that's why I chose Val. Moving on, my overall experience. So I mean, if you couldn't tell already, my overall experience was that it is profitable, and it was a great experience because I don't have to do anything. So as the first point mentioned, there's no experience and prior knowledge is required. So this means that you don't need to know what Forex is. You don't even need to know what trading is. As long as you have common sense and you can spend 10 minutes of your time just reading up, you can utilize her products and become profitable. You know, no guarantees though. But the next point is that there's no manual interventions needed. So what do I mean when I say no manual interventions? What I mean by that is that once you set it up, you don't need to touch it. You don't need to, you know, fiddle around with the settings. You just simply attach the advisor to the chart, and you can set it and forget it. Brings me to my next point. And what do I mean by set and forget? That means that once you set it up, you don't need to, you know, check up on it. It has a set algorithm that just follows over and over, and when the, you know, conditions are met, it enters and exits. So that's simple as that. You don't need to constantly check for the trend is going the right way for you, or etc etc. It just, you know, it's just one of those things where you can set and forget it, like an actual investment should be. But the most important point is that it is reliable. So when I say reliable, what do I mean by that? When I say reliable, I mean I'm referring to something that is you are getting what you were advertised. Val advertised a advisor that does X and is profitable based off her testing and for it on her live account, and that's exactly what happens when you purchase it. That is the same bot. It trades the exact same. It provides the same amount of profits or loss, but in this case, profit. So you can come into this and purchase knowing at the very least, even if you couldn't use it for some reason, that you did not get scammed and that you are getting a product that you paid for. So that's the most important thing. So the last slide here, my closing thoughts as well, is that here are 2 screenshots from my live trading results, and they're both verified. So if you don't know, you can tell these are fully verified by looking at the top here, and you can see that both of these pictures are track record verified and trading privileges verified. This means that these are legitimate. You know, I gave access to the third party to analyze my account. And the first thing you might notice here is that wow, Waka is significantly more profitable than Night Hunter. But if you take a closer look, Waka has been running for around 11 months, whereas Night Hunter has been running around for like 2 months. And additionally, these are 2 different trading strategies, right? So they trade on different algorithms. So, and Waka just so happens to be more of the profitable one. So, you know, you can keep that in mind. But as you notice that there might be, you know, some changes that aren't normal if you're experienced already with MyFxBook, is that you might notice that it says up 112%. That's because this image on the left here is, I set it to show and display what your account would look like if you started at the same time I did at only $1,000. So the account has more than $1,000, so you might see the equity different, but this is exactly what you would have gotten, if not better than me. So you would have 33% gains, which is around $333, while having an 8% drawdown, so around $80 drawdown, which is extremely good. You keep that in mind. Over here, Night Hunter, you can notice that the drawdown is higher than the gain, and this is normally for Val and other traders that this is never the case, and it's just because of the timing. So I started Night Hunter in a time where there was just more drawdown than, not more than normal, but there was just more drawdown than you would expect, because you know, usually when you start Night Hunter or you start using it, you probably start near the beginning of the year when trading is less, when you would have gained more, so you would be up higher than your drawdown. But in this case, I started and it's such a fresh account that the drawdown just so happened to be higher than the gain. So this doesn't mean it's unprofitable, doesn't mean that it doesn't work. As you can see, it's still in profit considering, you know, the low amount of trading days it has on it. So my closing thoughts are, I do recommend Val's EAs. I recommend that if you were to purchase them, that your trading capital is more than or equal to the cost of the product you purchase. So what do I mean by that exactly? So for example, if Waka is 800, you should have at least 800 or to 1,000, ideally 1,000 in your trading balance before you purchase Waka. So after you purchase Waka, you still have that $1,000 in your account, and this will help you earn back the cost of purchasing it at a faster rate, rather than if you only have like 500 or, you know, $100. So that's it pretty much. We know, who knows, we might see each other in a group chat. Have a good one, guys.